Hello, Oracles, and Happy New Year. Thank you for joining us for this year's first live stream. As you can hear, my voice is coming back, but it's not fully back. So it'll probably be a shorter one tonight just so I can try to finally get my voice back over the weekend. But I wanted to go over a few things with you guys because great stuff with Tesla yesterday, sort of, sort of not. So we'll kind of discuss why it was good, why it was not good, and how the market obviously reacted to it, and then the rebound today. So I'll give you guys a couple of minutes to get on here, but my goodness, it was definitely wild. What's going on, Bubby? It was yeah, absolutely wild today, the last couple of days, and I think the next few months, and this is kind of what I've anticipated, the next few months, especially the next month, is going to be very uncertain. Just all the stuff we've got going on, the inauguration, earnings that are coming out, jobs reports that are coming out, kind of like, sorry, kind of like the market needs to kind of do an assessment of what's going on over the next couple of months based upon what the Fed's telling us, based upon what data we're getting in, based upon how companies are doing, based upon the jobs, not only the jobs report that we're getting next Friday, but also what companies are reporting for jobs, if they're doing any layoffs. And we kind of get a lot of that information during earnings season that begins end of this month and goes into February. So I would say the next month to month and a half could be a bit volatile. So just brace yourselves for whatever could happen over the next month to month and a half. And then on the Tesla side of things, where it's sort of disconnected as well, we got yesterday the deliveries report came out and they did miss. They missed expectations. Expectations were about 507,000. They needed 515,000 in order to eclipse last year's numbers. They needed about 507,000 to just pass the 1.8 million mark. They came in at about 497,000. So great quarter over quarter growth. And they did cut back on a bunch of production for two reasons. They cut back on production because they're doing the Juniper update for the Model Y, and just thinning out end of the year inventory. We've seen that happen before. We saw that happen at the end of Q2 also. So they were just kind of thinning out that inventory and kind of starting over fresh. Another reason behind that is if they're coming out with this new or this manufacturing process when it comes to the Model Q, perhaps they're kind of keeping inventory light as it is. So as they get into this new manufacturing process, they can start doing all the models this way. I don't know for sure. I'm just guessing on that, but it sounds like that's going to be a much more efficient process and they're going to be able to cut costs down significantly. So we'll see what's going on there. And that's why they cut inventory. But either way, thinning out inventory is a good thing. Of course, still didn't hit the 500,000. We still have yet to have a 500,000 delivery quarter, but I have a feeling we are going to get there. Perhaps even next quarter, we would end up getting there. So again, to me, it was good growth numbers out of this, but of course, falling short of expectations, falling short actually for a growth company, falling short and missing for the first time in their history, year over year growth, not boding well for Tesla in the near term. So that's why the market sold off yesterday. Then today, we ended up getting a rebound significantly. Now, the whole market rebounded and Tesla kind of followed suit with it. But Tesla did get a couple of analysts come out to give them upgrades. And so those upgrades kind of did help in the process while we saw the entire market kind of rebounding. And the market rebounded today kind of because we got one of the Fed members, Barkin, came out and said that we were expecting a good market this year. The Fed was going to be expecting to do what it needed to do to give us a good, strong stock market this year. Of course, and of course, the market is going to rally because of that. And so that was good. Tesla rallied with it, got the upgrades, rallied with that as well. And I think a lot of analysts also took a step back. And Peggy, if you guys follow Curious Peggy, you may have seen this on X. If not, definitely follow him. And he had discussed how when you look at the energy numbers, and I've talked about this before myself, energy numbers are actually making an impact on the bottom line. It was about half of the dollars on the bottom line. So because you make a lot more gross margin from energy than you do from vehicles, actually half of the bottom line numbers tentatively that we can see might be coming from energy. So of course we still need to see the earnings report, but based upon the prior earnings report and what we got for the data for the energy growth this quarter, that's what we're kind of looking at. So I think we are going to be in a position where Tesla's energy growth is coming up. And we've talked about it before. We'll always talk about it. Energy could end up eclipsing vehicle numbers at some point. Now, we may end up getting Robotaxi, Cybercab, Optimus, all those numbers come out before and go way past energy, but eventually energy will eclipse all of the vehicle numbers. Sorry, this is part of the reason why it's going to be a short one tonight. I still got this cough going on. I don't feel ill. Like I never felt like sick. I just got congested, lost my voice, and that was it. So it really wasn't terrible. I can't talk and I cough a lot. But thank you, Lang. Yes, I do sound better. Yeah, I'll take care of it. I may have some tea tonight. I'm not sure. If not, I'll just get to bed early and I keep on drinking plenty of water. So I should be good. But anyway, getting back to Tesla. Um, so yeah, so energy is going to be growing. So that was actually the number. So I'm kind of paying attention to the energy side of the things and seeing how that's growing. Because again, when you're a long-term investor and you're looking out 10 years from now, vehicle revenue might not even be the number that we're talking about. I mean, we still have, Tesla saying that they're going to get to 20 million vehicles by 2030, but something's changed along the way. And that thesis, when Elon realized that cybercabs were going to be the future and robotaxis. So with that being the future, whether we get to 20 million vehicles sold or not may be irrelevant. So that kind of changed. But again, I think when we get to the 2032 timeframe, which is when we kind of really started talking about these things, at 2032, we may not even see revenues from vehicles being the number one source of revenue. It could be cybercabs or robotaxis. It could be energy. I don't think it's going to be Optimus at that point, but vehicles might be number two or number three when it comes to revenue generation. More than likely, it will be at least number two behind energy when it comes to profitability. And if cybercabs do end up taking off as expected in 2027, it will probably fall to third place when it comes to profitability as well. So these are the things that you're looking at as a long-term investor, which is why we've seen the stock price run up as it has, especially when version 13 came out for FSD, kind of giving us that inclination that this is definitely happening. So, as you progress further and further along with the technology, more and more of the potential doubters or the people who are on the fence are kind of going to, all right, this is definitely going to get solved at some point. And whether it's going to happen next year, 2026, 2027, or after that, more and more people, as they see the technology growing, are recognizing this is going to be a reality in the future. So the reason we see the stock price sell off is because Wall Street looks 12 months ahead. That reality for cybercabs on the road is not 12 months ahead. So they're not being able to put in any sort of revenue from that. You have guys like Gary Black who do look further out. They'll do a 10-year and then they'll kind of do a backtrack on that, a discount cash flow model on that. And when you end up seeing that discount cash flow model, then he comes to his numbers and he factors in things, but you still don't truly know. Like, you can use Uber and Lyft and taxi numbers when it comes to revenue generation to kind of figure out cybercabs, but then you also are probably going to have a race to the bottom when it comes to Waymo, cybercabs, and other vehicles like that on the road. So where is the bottom going to be for that pricing? And then you figure out from there. So there's still a lot of unknowns in the meantime to figure out what the true revenue is going to be from all that. And then, of course, the Model Q. And then the questions with the Model Q, yes, Hanif. Going into the Model Q, when you start looking at the Model Q coming out, we've talked about it before, and it's not going to be this $25,000 vehicle that a lot of us thought. The $25,000 vehicle is going to be the Cybercab. That's coming out with no steering wheel, no pedals, and not until 2027. That's the $25,000 vehicle. Hold on one second. Sorry. I got to blow my nose too. Thank you for bearing with me on that one, guys. All right. So that's why it's not going to be a $25,000 vehicle. Then you start looking at the fact that if we lose the EV tax credit, which Trump has already said they're most likely going to do, and Elon has said that they don't need it. So I don't think Elon's really going to be fighting Trump if Trump wants to get rid of this EV tax credit, especially because the EV tax credit kind of is counteractive towards Doge, where they're trying to cut government spending. So if Elon says that they don't need it, then obviously he's going to say go ahead and get rid of it because that's going to benefit the company or the nation as a whole from that regard. So that means that we're probably going to end up getting a vehicle that right now the cheapest model out there, and forgive me if I'm wrong on this, I haven't looked recently, would be the Model 3 without any EV tax credits. I'll take a look at it really quick. Hold on. Um, so if I go to tesla.com, da, 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 I'll bring it up for you guys so we can all see it together here. All right. So if we're going to, let's say, a Model 3 base model, the cheapest, I'm just going with the cheapest model that they have right now, which is the Model 3 base. No, we're going to finance it. Oh, actually cash. But I don't want to do with the incentives. So there you go. Very base model is $42,500. That is the lowest price vehicle that they have right now. So chances are, and Troy Teslake has mentioned this, how we're probably not going to actually see these getting delivered until the second half. They'll start producing them in the first half, but we won't end up seeing actual deliveries coming out till the second half of this year, which is fine. But the Model Q coming out, he has said is probably going to be around the $37,500 mark. So we know that average cost of production of vehicles has dropped significantly down into the low $30,000 range. So if you're doing that and you have a lower price or lower cost of manufacturing, you still have to get to volume production on that. So let's say you stay around that $30,000 mark for production, and then you bring it up to about probably $37,000 is where it's going to start. So if you don't have the EV tax credit, you're not going to have a sub $30,000 vehicle yet. It's going to take some time. It's going to take just getting to volume production. But even Elon isn't even set on getting us to the point where we're going to be having. He basically says the future is going to be an autonomous road. So for Tesla to put efforts into mass producing a cheaper vehicle makes no sense if that's not going to be the future. Now, of course, it's going to take some time to get there. So is Tesla going to lose out in the meantime because they don't have something that cheap? Or are they still going to come out with something maybe around the $30,000 mark? Or do they feel that this manufacturing process that they're doing will end up bringing the cost of production down enough so that they can sell these vehicles for under $30,000 and then be able to sell the Cybercab for about $20,000? Again, still some time to tell on that. But the problem we have right now is the sub $30,000 vehicle might not actually ever exist, at least not in the next 12 months, which might be part of what's getting priced in. So when we actually do get to the reality of the Model Q, that might actually kind of scare the market a bit when it comes to Tesla because they're going to say, oh, this is a lot higher priced than we thought. And then we're going to have to wait and see, well, what is the actual addressable market that's hitting this? What are the actual deliveries coming out of this vehicle? There's a lot still to be played out on that. So we'll just have to wait and see how that's going. Let me see. My dad, irrational that they trade up big because of energy and self-driving. Yet when they slightly miss on deliveries, it trades down even though they beat on energy. And that's the whole thing too. The big piece about that, as we were talking, is Wall Street, a good chunk of Wall Street doesn't see Tesla as anything currently other than an automotive manufacturer, which more and more are starting to turn over. And you can see that when it comes to energy and the energy growth, which is great. And especially considering Trump is going to be, strong on pushing for energy next over his term. So when you're starting to look at that, like, is Wall Street not getting it? Or is Wall Street intentionally driving the stock price down because they do get it and they just want to be able to buy more at a lower price? Again, that all comes to manipulation. And, something I've mentioned before, and I thought about it again yesterday, is a company very, very rarely trades for its actual intrinsic value. Very rarely. You're either going to be paying a premium for it or you're going to be buying it at a discount. And that premium could be anywhere from 1% to, I don't know, could be 100% depending on the company, or you could be paying a discount on it from anywhere from 1% to maybe 80%, which we saw in 2022. So It's all going to come down to how you value that company. And when you're looking at Wall Street and how they value it may not be the same as how you value it, which is why it's so important to figure out how to value a company for yourself, whether it's Tesla or any other company that's out there. So important because if you're starting to factor in the energy stuff and you're factoring in vehicles and then you start to factor in FSD, and if you truly think Cybercab is coming out in 2027 and you start factoring in those numbers, what do you think the value of the company should be at that time in 2027? And let's say you think it's going to be $500 in 2027, buying right now at $400 is going to give you about a 25% upside. Is that enough for you, or would you like to buy it at a bigger discount? So lots of different factors that go into it, but very rarely are you ever going to be paying the actual correct price per se of a stock. It's always going to be most likely higher or lower, which is why Warren Buffett makes himself so wealthy because he buys at discounts. He's very, very patient and he waits for there to be a very good discount. He will search for a lot of companies and he doesn't actually follow macro environment stuff. But of course, when you get a recession or a big bear market, the stock market's going to be down. Could be down 50, 60%, like we saw during the great financial crisis. Then everything is on a discount. And then you can find other companies within that may be discounted even more, just like we saw with Tesla when it got down to $100. That was a significant discount that you were able to purchase the stock at. So, let's always pay attention to what the company's fundamentals are and then do your own analysis to determine if you think you're going to be buying it at a premium or a discount. Um, Lang, it costs more than $60,000 Australian for Model 3. Still costly to me. And that's a good point too, Lang, is the US, it's $42,500. You go around the world and it's going to be significantly more for a bunch of different reasons. So you start putting out that Model Q, and let's say in the US it's $37,000. Maybe over there in Australia, you're looking at maybe 50,000 Australian dollars. So for us, it may only be a $5,000 discount, but maybe it's a $12,000 discount for Australia. That could actually be a good turn for other countries. Maybe in Europe, if it's going to actually be a smaller version of a vehicle, Europe could do extremely well with that. We know a good chunk of Europe is kind of going through a recession right now. So having that vehicle coming out for Europe could actually be really, really strong for them, considering European sales have been struggling lately. So that could be very beneficial as well. Buying a little more when Tesla dipped big. Yeah. Yeah. Huge sell off yesterday down to about the 380 mark. So anybody who picked it up did well today as a short term. Still don't know what's going on long term. What I'm kind of looking at is how we looked at things back in 2021 and early 2022, where we saw that top at 414 and never really got to get back up to it again and cross it and test it again. So right now we're looking at about that $480 mark. So I want to see us be able to get back to that 480 and test it again, and then see what happens from there. If we do not make it back up there, could be very similar to what we saw, where we just really dead cat bounce down for a long time. So we'll just see how that plays out. Yep, there you go. And then in Hanif in Canada, over 50,000 for the cheapest. So again, maybe there we get it down to 40 or $42,000 for a Model Q. Like it or not, as we speak, they are a car company with a high valuation. Exactly. And that's what I've been saying is, the big money, retail investors have a loud voice, but the biggest money that's out there, all these institutions still only see it as a car company because that's where the majority of the revenue comes from. Now, as I said, energy is picking up, especially when it comes to bottom line dollars, but the majority of their business is from vehicles. And so until they actually get to the point where, energy is making a more major impact on the top line and on the bottom line, they're still going to always just be vehicles. But the way the energy is growing, we might actually see energy making an impact as well come the end of this year. So we'll just track that as we go forward. Alex, not a buyer at these levels, but I'll hold some the shares I have. I'm right with you, Alex. I know a bunch of people, Peggy being one of them, who took advantage of the dip yesterday and bought some. I mean, that's cool. I have no problems with that, and especially if you're looking out, 10 years down the road, you think the stock's going to get to $1,000, you're still going to get over a 2x on your money. That's awesome. Again, I got no problems with any of that. But for my plan and the way I'm looking at it and how I value the company as well, and how I understand how Wall Street values it, I think we've still got some time. And I do think that we could end up coming back down significantly more. I still think we fill that $218 gap. And so at that point, then I'm going to be paying attention a little bit more and probably picking up more. I've been consolidating in my portfolio. Today, I sold out of an ETF, AGGH, which is based on bonds. I know the bond market's going to turn around eventually, might even be this year, but I own TLTW as well. I don't need them both. I'd rather take that money from AGGH. Made a little profit on it, nothing big, but I'd rather take that money. So it actually benefited me fair. So AGGH, because of the way I played it, I was positive overall on my total return because of the dividends I got from it. Those dividends I distributed everywhere else in my portfolio. I sold the actual ETF for a loss as a capital gain loss. And because of that, I can use that as a write off next year. So I'm just starting off the year with a write off on that. Wasn't a lot, but just starting it off there, then I can distribute my money elsewhere, especially with it being unknown this year. So I have even more cash that I put into the stockpile as well. So I redistributed that. And I have a few other areas. I've got 6 other stocks on the chopping block that I'm going to look at to thin that out and consolidate. As I consolidate, I'll be able to add to Tesla even sooner. But again, I'm still just going to be following my strategy. And as of right now, Tesla is not a buy based upon my portfolio. CEG and VST went up big for these 2 days, nuclear energy and utility space. Yeah, utilities, energy, a lot of those things could be very good. Enphase doing well in Enphase. As far as an energy play goes on a PEG ratio respect, Enphase is a much better buy if you're looking to buy an energy company. So if you're looking to buy Tesla as an energy company, it's still a little pricey. So looking at Enphase could be a better option for you. But I still think Tesla as a company obviously is significantly better because they have more to offer other than just energy. So it's kind of like by having Tesla, you have a little more diversification. But yeah, honey, and we know, and here's the thing, and as just to clarify what my dad was saying, if and I know I went into it also is we know it's not just a car company. We know that Tesla offers more, but based upon the revenues that they're currently bringing in, that's how they're getting valued. And that's how it's looked at because you look 12 months out, and 12 months from now, Tesla is going to be projected to still bring in the majority of the revenue from vehicles. Now, again, energy is going to be bumping up there, but it's still going to be such a small percentage of their overall revenues. It's still a car company who does energy on the side. It's like energy is their side hustle right now, and they're trying to build up their side hustle so they could do that full time. And that's just what Tesla's at, and that's just it. So that's how it's being viewed. Not to say that that's what it is, but that's what it's being viewed as right now as a car company with a high valuation based upon a lot of future prospects that have yet to come to fruition. And then the question comes down to, and the battle everybody constantly has with the company is, are they going to come to fruition or not? And when are they going to come to fruition? And what kind of revenue are they actually going to be bringing in with that? It's always the battle that we're having here. And again, so that's just really what the reality is behind all of it and the major discussions. That's all. I wonder if Tesla gets government approval regulation for FSD during the Trump administration. I think they will. Just considering Trump is going to be in office until uh, actually until 2029, realistically, because that's when they'll change over January of 2029. And if cyber cabs are going to be going on the road in 2027, based upon how Waymo is already building up as well, I have no doubt during Trump's term, we're going to get everything regulated. We'll have cyber cabs on the road before he leaves. I think we're going to see a significantly different landscape when it comes to transportation by the time Trump leaves office. Not to say Trump's going to be the reason for that. I think it's just going to happen during his time in office. US dollar is stronger and stronger recently, bad for buying imported US cars or goods for now. Um, for now, it's better. Just just be cautious because if we end up getting into a recession, that could flip quickly and could benefit you guys because then you can end actually being able to buy the vehicles for a lot cheaper. But who knows how that's going to impact the entire world as well. So I think this next year is um, going to be questionable. So we'll see. Dave Hudgens, a whole different company now. It is. I mean, it's so here's the differences between when we saw the run up that we saw in 2020 and 2021 versus now. 2020 and 2021, there was a lot of speculation similar to what we have now, but there was a lot less substance behind that speculation back then. And because of the fact that we had zero interest rates, everything in the market, we had a market that was ripe for massive growth companies to take off. Tesla being one of the top ones benefited from that. Obviously, we saw that reverse in 2022, but now we're at a point where we've kind of jumped back up. And I think a lot of the stuff has been a lot of sentiment overblown, but at least now there's more substantial, concrete, fundamental stuff going on with Tesla. That speculative stuff that's going on actually has substance, actually has like you can actually see the roadway to the final iteration of FSD. You can see the runway to energy actually growing because back then energy was barely a blip on the radar. Now it's making an impact. Now we have Optimus actually making progress. Back then, Optimus wasn't even a thought. So there's a lot of fundamental changes that have happened positively with Tesla over the last 2 to 3 years since we had that last. So yes, it is a much different company now, and I think we go out 4 years and it's going to be even more drastically different. And that's the changes we're going to be seeing over the next 4 years is the company changing from, as we're talking right now, as an automotive company that is getting a high valuation on it. And now, to be realistic, if you guys watch Meet Kevin, he did a full breakdown on it. Even if you value Tesla as an AI company, still very expensive. You know, a PEG ratio of 5.5 on any AI company, AI companies maybe get like a 2.5 to a 2.6 for a PEG ratio. Tesla's at a 5.5. So even for an AI company, still very high. So that's why the valuation is very high. And because of the fact that they only bring in the majority of their revenue from vehicles, you value a 5.5 PEG on a vehicle company, that's astronomical. So again, even a lot of you who see Tesla as way more than just a car company, you've got to be understanding and realistic that even as an energy, AI, and vehicle company all rolled into one, a 5.5 PEG is very high. Richard Bean, Happy New Year, Tim. Happy New Year, Richard. Q is their competitive moat Tesla has with Optimus aside from their manufacturing prowess. I mean, the moat Tesla has right now is EVs, except for China, because there is the competition there. And eventually there will be competition here. But one of the things that I look for when it comes to moat, and people ask about a moat, is brand name, a brand recognition. So you think about tissues here. I've got, which I'm going to use. Hold on 1 second. You've got full generations out there who would call that a Kleenex. It's a tissue, but Kleenex is the brand that made a name for themselves, so people call them Kleenex. Just like Xerox. I'm going to go Xerox something. I'm going to make a copy of it, but Xerox was the company and the brand that came with that. Brand recognition is a huge way to identify a moat. Nike is another one. You recognize that symbol everywhere. McDonald's, the golden arches. Tesla is very similar to that. People can go out there and they're going to say, hey, do you drive a Tesla? They're going to be, EVs and Tesla are going to be synonymous for a long time, especially in the US. So when you talk about that, that's what's going to end up happening. So to me, that's a huge moat. Now, it's also going to be something similar to like Kawasaki. Kawasaki makes motorcycles that we all know. They also make pianos, and it is the same company. So I think what's going to happen is a lot of people are going to be mind blown down the road. They're going to know Tesla as a car company, but they're going to say, oh, Tesla does mega packs. Tesla does power walls. Oh, Tesla, it's a cyber cab, and Tesla may be known for the cyber cabs, and then they'll have Optimus. So there may be a huge diverse thing where Tesla's name is going to be kind of everywhere, and that to me is going to be their moat, is that they're going to be everywhere. And it's kind of like the whole thing that, you know, the shock and awe type of stuff that Elon does when it comes to the design of the Cybertruck. Like it or hate it, it turns heads, and it brings up conversations, whether it's good or bad. It kind of goes back to the Hollywood type note of there's no bad publicity at all. Keeping your name in the spotlight, unless it's for something really awful, keeping your name in people's mouths and in people's heads is going to be beneficial for you because you won't be forgotten, and it's going to bring to light a lot of other things. And eventually that sentiment wanes and comes and goes. And we've seen that happen with Tesla. Same thing's going to happen. Whether it's good or bad, Tesla's being talked about regularly. This is how currently Tesla's advertising basically is. Obviously, we can discuss advertising all day long when it comes to Tesla, whether they should, shouldn't, whatever. But because of the fact that they're constantly being talked about, they're out there. And I think that is helping create that moat as well. And then the manufacturing prowess, let's see what happens with the Model Q. If they can really revolutionize how manufacturing EVs are going to go, that could be it. And who knows if they're going to end up selling like basically their factory layouts. Are they going to be like stamping these for other people? Let's say GM says, hey, we want to manufacture the way you guys are doing it. Come build us a building. I don't know if we're going to get there, and I don't think GM would ever do that, but maybe that's what ends up happening in the future as well. The gap that would fill at 250 sits on a fib retracement line. Oh, I don't follow the fib very much. This is a Fibonacci sequence for you guys who don't know. It's all stock chart analysis. Yeah, that's I realized I was on the fib. That's awesome. The 218 might be also then. I don't know. I just know the 218 is the big gap that's down below. And we have filled some gaps along the way, by the way. So some of the gaps, I'm going to jump into the chart here really quick. Okay, I'll bring this up for you guys in a hot second here. Let's do this, this. So looking at here, so now we came down. Now we have a gap here at 358. So this is the first gap I'm paying attention to. And as I'm talking about dead cat bounce, we hit this 488 mark intraday, but closing day we were at about 480. We've come down, we've bounced up, could not get back to that 480 level, hit 465, and have now fallen since. Now we're rebounding. So we created a gap on the fall yesterday. I talked about it on my video on New Year's Day. I said we're most likely getting a gap one way or the other strictly because of the delivery numbers that's coming out. We got the gap down. We have now rebounded and filled that gap up. So we have a small gap up to 150 above us. Even if we fill this gap, still doesn't hit that 465 level. So I want to see us get past that 465 to confirm we are not in a dead cat bounce. If we go up and create another high that is lower than 465 and come back down again, I think we need to start really paying attention to these gaps at 358, 345, 324, and then 255. This 255 here is what Alex is just talking about as that bottom of the fib. So that's one of those fib retracement levels. So just keep all of this in mind as an investor. And again, looking at a company that's at a 5.5 peg, even as an AI company, is expensive. It probably is going to come down. So I don't want you guys to get freaked out or scared if this comes down. I just want you guys to know that it is a possibility, and in my eyes, a likelihood that we come down to those levels. So I just so you guys know, that's where I'm at with that. And again, you guys know how much of a long-term bull I am on the company. I love the company, love all the stuff that they're doing. I think there's yes. Sorry, I'm reading these comments. Thank you. Um, and uh, and yeah, so the company is going to be great long term, but this is why understanding valuations is so important because Warren Buffett loves Coca-Cola. It's a very mundane stock, doesn't do anything, is pretty boring. But even Coca-Cola is at points where Warren Buffett would say it's too expensive. I'm not buying that. And so he waits for it to get back down to a level that is at a discount. And it always comes back down to a discount. Every single company will always, at some point, come down to a discount. Maybe it doesn't happen now. I mean, look at when he got into Apple, 2016. If he bought it in 2007, 2008, he would have made a ton more money. Doesn't matter. He still got Apple at a discount in 2016. Tesla, even if it runs up from here, at some point, maybe in 2029, it will be at a discount. Obviously, it'll probably be significantly higher than the price is right now, but based upon the current valuation at that time, we may get to a point where there's a discount. So there's always going to be a discount on every company, Tesla included. I just don't think we're seeing a discount on the company right now. Ooh, nice. Superchargers opening to Hyundai, Genesis, and Kia this month. That's awesome. Good to hear on that one. Oh man. So yeah. So going back to the Kleenex, thank you, Alex. Yes, I tried to be creative with those things, and it just happened to be great timing. But yeah. So Tesla's got that moat. Tesla has a giant moat because of their brand recognition, and I don't think it's going away anytime soon. And the more products that Tesla can put out between Powerwalls, Megapacks, Optimus, Cybercabs, between all of that, they're going to have their brand everywhere, and that is going to be a much bigger moat for them. And I think that moat's just going to get bigger. Are they going to be the biggest player in energy? Probably not, but that's not what they're going for. But it's going to be a significant revenue driver. Are they going to be the largest EV manufacturer in the world? Maybe they are. Maybe they're not. That's again not their goal, and they also have said that they can't do it by themselves. So they're going to need help from other people. And then is Optimus going to be the number one? I'm sure others are going to get into robotics like that as well. Is Tesla going to be the biggest? I don't know, but they're going to have their name out there and they're going to be known for it. So that's just one of those things to pay attention to. And exactly, Alex. Oh, sorry. Like, have patience and waiting for the right time to buy. That's all it is, and it's not about timing the market. It's about valuing a company and finding it at a discount. I'm actually in the process of reading how to do that, so I can do a better job of valuation. I've done my valuations, but if you guys haven't read it, it's Rule Number One by Phil Town. Highly recommend it. It's a great read so far, and I'm not usually a reader of actual books, but I've been reading this one. So if you want to learn how to actually value a company, read the book. You'll be able to do that, and you'll understand why looking at Tesla right now is not at a discount. And while you can argue that just dollar cost average over time, you'll do fine. You absolutely will. But if you're looking to purchase the company at a discount, it's not at a discount right now. That's all. Alex, what are my three biggest holdings at the moment? Great question. They're ETFs actually. So the way I've done my portfolio, I'll bring it up for you guys here. And I'll get off in a minute too because my throat's starting to get sore. It's not like sore hurts sore. It's just because I'm talking so much. So make sure you guys can see this. There we go. Perfect. So this is my portfolio, and I'm heavily weighting these here because they're income drivers, and I want to drive this income to be able to have passive income coming in to take advantage of opportunities to be able to buy these companies down here because these are my long-term dividend growth stocks and my dividend growth ETFs. So technically, my largest holdings would be this one here, SPYI, and then JEPQ are my two highest. My third highest would then be QQQI. And those are generating collectively for me 20, 30, 40, about $55 every single month. Those bring in for me. and then I put that money into other plays. When it comes to like REITs, BDCs, and things like that, my highest one is HTGC. That's Hercules, and then Maine. BDCs have been doing very well as of late, um, especially ones that are involved with um, anything to do with the AI movement, which HTGC is. So those two are my highest here. And actually, looking at overall price, HTGC, wow, why is it so? That took off. I wasn't even paying attention to that. That's actually my largest holding. Interesting. Looking at my dividend growth ETFs, SCHD, they're all evenly weighted. But SCHD is my favorite by far. Not even a question, hands down my favorite. I just bring them up equal weighted because long term, I don't mind if they're equal weighted because they all have a different role that they play. And then I kind of equal weight all of my dividend growth stocks, but I bought an earlier American Express. So my cost basis on that is like 190 and it's at 303 right now. I caught that at the right time. So that is my highest individual holding at 917. And then behind that, my second highest is Tesla at 820. So those are my two highest individual holdings. Third place is kind of a balance between everything else. Um, but but again, Tesla here at 410, 820. My goal is to get this to about $625. That's what the threshold is for this whole category. Actually, both of these categories is 625. So if Tesla dips down to that, $255 level, that will be at a point where I will add to the position. So I will add shares of Tesla at that level. 218, I'll probably be adding an entire share, just so I can keep myself at that 625 level. Then as I grow and every one of these achieves that, I move it to the next level. So the next step up is 650. So once all of these are at 650, I do the same thing. So as the stock fluctuates, I'll buy more and more to keep it at those levels. And as I consolidate, it means I can move even more money into it as well. And so right now it's just not a buy. But if it dipped down to that 255 level, it would absolutely be a buy for me. Let me see. Will it be too late to buy more Tesla after January 20th when Trump takes office? I honestly think it's going to be a sell the news situation because don't forget Tesla's earnings, by the way. I thought that they were speculated to be the 22nd. They're actually the 29th. Part of me thinks that they're doing it the 29th because of the inauguration on the 20th. I don't know. I'm sure Elon's probably playing some minor role in some of that, but nothing, I don't think major. Um, so, but I think that, so it's going to be January 29th is the earnings. And so I think we might see a lot of these companies that did very well when Trump actually won the election might actually solve. So it's like a sell the news situation. Like they bought on the speculation of Trump, taking over presidency. Once he actually officially takes over presidency, we could see a big sell off on a lot of these. Earnings may play a factor in that as well, but just brace yourselves. And if we continue that dead cat bounce, let's say we bounce down and end up getting back down to that $350 level, maybe fill in that gap at 358 as we get to the election time rolls around, we drop down more, and then maybe the earnings come out and we just get to sell the news on the earnings as well, and then dip below 300. That's a potential. I'll keep you guys posted as I follow the charts. So I don't think it's going to be too late. Again, once you figure out how to value a company, you'll learn that there's never a time that's too late to buy. Um, it just depends on what your thesis is and what your strategy is for your own personal portfolio. Dad, patience and waiting easier said than done. It is. It definitely is easier said than done. It's discipline. You know, Warren Buffett says to himself, the most important thing you got to learn is discipline. And the better you get at it, and the better you're going to succeed. My dad's discipline is very good. Not perfect. Nobody's perfect, but he's successful. And because he's got his disciplines and he sticks with them. And he has learned over time that when he doesn't follow his disciplines, he doesn't win. So, he's got a strategy, but even following a strategy that works doesn't always work. Health and fitness. You got a strategy to eat well. You get presented with some cookies that you just can't resist. Eat some cookies. It happens, man. So, as long as you don't make it a habit to lose your disciplines, then you'll be perfectly fine. That's all it is. Thank you, Alex. Yes, I will. I'll be getting off of here in a hot second. Let me just finish these comments and then I will be off. Yeah, it is diversified. I want to consolidate. I've got a bunch of overlaps that are unnecessary. I intentionally over diversified so that I could do exactly what I'm doing now. I'm very, very happy and content with the quality of my portfolio. And I just keep on working on whittling it down to making it even better quality. Yes, it's even harder than it said. Patient right discount to time to buy. Yeah, and just learning how to do it is fine. And everybody has their own strategies and ways of doing it. USD 13,600 for a Tesla Powerwall now. Oh, really? 13K. Damn, that's a lot. I wonder when high tariffs and deportation of immigrants news will be out from Trump or related government people. So I don't know. I mean, a lot of times presidents when they take office do a lot of executive orders right away. So we've been seeing more and more executive orders from the last few presidents. It's mind-boggling, but I have no doubt this time is going to be any different. I have no doubt we're going to see a lot of executive orders coming out. So we'll see what actually goes into those within the first week after he takes office. Sal mentioned this time before ACHR. Yeah, I think we looked that up last time too. Um, Going into what we're looking at here in the next year as in-depth look on ACHR. I thought I brought that up. I'll do a quick chart analysis on that one, and then I'm going to jump off. AC. Actually, let me see. I can see if I did it before. Let me see here. Nope. Let's go over to here. Yeah, I did look that one up for you. I'll bring it back up again for you really quick. Present screen. Yeah, so just looking at the chart here quick. Um, it's been on a massive tear lately. To do an in-depth on it, I'll take a look at the company. I'll put that on my list of things to look into the company more in depth on though. So they've got a little gap down here to 626. They've been on a big run. I don't know why. I'd have to see why, but it's been since the election. So I'll take a deeper dive into that one. Archer Aviation, yeah. So yeah, Sal, I'll put that on my list. I'll do a deeper dive on that one. Yes, please hit that like button. I appreciate it, everyone. Yeah, consolidating is good. Shorten it down, concentrate on Palantir, Nvidia, Tesla, Google, Apple, great options. Some yield max. I use yield max strictly as an income play. I don't want to hold them long term. I probably hold them maybe 4 years at the most. That might be even too long for me, but yeah, cash flow generation fantastic. Other than that, I'll probably dump them as soon as I have enough income coming in from my other plays. All right, that's all I got for you guys tonight. I'm gonna go rest up my throat. But thank you guys as usual. Love chatting with you guys. You guys are awesome, and I will see you guys next week. I'll put up a couple of videos this weekend. Hopefully, my voice is good enough and coming back, and we'll be back at it next week. So thank you guys.